So good afternoon, everyone. It's 1:30. Welcome to the third session of our ISA Mastery course. I think you would agree with me that in the notes there's a great deal of material. Maybe too much, but a great deal of material. And so rather than keep you too long today and maybe rush the material, I've managed to get VectorVest to, in fact, list another session, and that's on next Thursday, the 11th of May at 1:30 p.m. And you'll be getting emails about it, obviously, but that's not this Thursday, which is the fourth Thursday week, which is the 11th of May at 1:30 p.m. And a really important part of course, is targets. When you can, especially in a market like this that's not following through, when do you actually take your money off the table? So I'm going to try and attend to that in mostly next week's session. And it's not an easy place because there's no exact answer. It is a philosophy as opposed to any form of methodology. So that's what I intend to actually look at next week. So I think that we're nearly all there, and some interesting questions coming in. And I think that the problem with having too many methodologies in your kit bag is that frequently one methodology will be telling you to buy and the other will be telling you maybe even to sell. For example, I think Anthony mentioned that when you get a breakout of a pattern, for example, a triangle or a flag. So I wrote about the flag last weekend in my essay. I hope you had a chance to read that. But for example, when you do get the breakout, the stochastic could easily be well up in the overbought area, especially if you use my 8-day stochastic. It can be overbought already, and that can in fact put you off taking an exceptionally good trade. The stochastic will get you in probably at the low of the flag, but all we need, folks, is one methodology, one setup that you'll follow through thick and thin. I think that the thing for me that threads through all the setups that work reasonably easily is that the trend must be at your back. And I don't care how you define the trend today, we're going to be talking about a couple of ways. You know how I define the trend with those three moving averages. I sometimes take trades against the trend, contrarian trades, but I wish I didn't, tell you the truth. We'll look at Jerry D'Ambrosio has a much weaker, in my opinion, method of defining the trend that I have. He looks at a 50-day and 150-day moving average. So that gives the trend much, much more room. And we look at all of that during the course of this session, which I hope will last an hour. It's next Monday. The Q&A is on the Tuesday because of the UK public holiday. And our session, our bonus session, is on Thursday. That was the only day that I could put it, Ross, because I'm full every other single day of the week, and I have a show at the weekend. So the only place I could put it was the Thursday. So the Q&A next week. Q&A this week is tomorrow. Q&A next week is on the Tuesday, the 9th, and then our ISA Millionaire session on final session Thursday, the 11th at 1:30 p.m. All right. You should get emails about that, Ross, but I admit it's maybe a bit confusing. So again, you know where I'm going now. I've got to put up the disclaimer. Although I'm qualified to give financial advice, I can't do so because I haven't sat down with you and done alone in a detailed fact find. I'm allowed to talk about stocks that I hold myself, but I have to make it very clear that although those stocks are suitable for me, they may not be suitable for you. So that said, we can move on and we can look. And I've summarized very quickly what's happened since the last time we've spoken. That's the overall UK market since COVID. And you can see this was a very special time, folks, because during this period, there was no diversification whatsoever. And that's quite unique, because even in the global financial crisis way back, there were sectors that were doing okay when the market was falling. And So it didn't last very long, but it was quite unique. Everything fell. And then we had this big run up that we all know about. We've had this bear market. And to date, and I'm hoping that the bear market is closer to its end than it's to its start. But to date, the bear market, in fact, although it's been hyped, although it's been difficult, is nothing more than a 50% retracement of the last move. Okay, so it's perfectly in sync with the last move. We'll come back into this range as well. And we're now moving up here. We're starting to get this rounded bottom, which is good. I think that you all have been reading the papers this weekend. You've seen what's happened with the New Republic Bank. It's been bailed out by JP Morgan. And it's the second biggest bank failure in American history. And that's a big number. What else have we got? Well, we've got, of course, this debt ceiling in the US. Those of you that haven't been in markets during the debt ceiling will know that invariably, sooner or later, the debt ceiling will be raised, but there's normally a month or 6 weeks of a set-off as the guys in the American Congress battle out for their own unique little bit of ground. So it's a really painful period. We've got that ahead of us. This is a big, big week for data, and clearly that starts with the Fed on Wednesday night. So that's the UK, and as you can see, the MTI has now gone down below 1, and that means that the underlying trend is down. We've still got it confirmed up in place because clearly it hasn't been down yet for 2 weeks in a row. The buy-sell ratio, better than it is in the US, but still well under 1, and we're in a down situation in the UK market. We've got the confirmed up in place still. And we're stuck in this damned range that we've been in now for, that's the last year. Okay, so stuck in this miserable range. And difficult going, that's for sure. Very difficult going indeed. That's the DEW. The DEW is still up. Came back to the moving average that defines its construction last week and bounced up on Thursday and Friday. The last time I looked, it was flat for the day. I don't know what's happened now. So underlying trend is up. The DEW is still up. So that's not true. The confirmed up is still in place. The DEW is still in place, but the shorter term trends are still down. So that's the US market, folks, and the US market has got a confirmed down in place away from here. DEW, is the DEW the same as the DPO? No, the DEW uses the detrended price oscillator in its construction ROS. So if we go back to that chart, that's the DPO. And if the DPO is above its center line, which is 0, and the price closes above the moving average, which it did there, then it prints a buy signal. So the DEW includes the moving average and the DPO to form a trading system. The DPO is just one part of it. And I think I went through that in reasonable detail way back in lecture 1 or lecture 2. So when you get a second, have a gander at that. So the American market and the breadth of the American market is absolutely awful, folks. We're still sitting down at a mega oversold situation right down here at 0.29. Up a little bit over the last day or two. Thursday and Friday were good days on the American market. But the advice is to sit in your hands and do absolutely nothing, folks, there. So again, for the last, this is a year, we've been sitting in this same damnable range for the last year. So not easy going, that's for sure. There's the gold market. This is the daily chart. This is the last wave up. I've counted 5 waves in this. 1, 2, 3, 4, and 5. And within this, I counted 1, 2, 3, 4, and 5. But this just doesn't want to come back, does it? Very, very stable there. I'm still holding my position in the GDX. And my advice tomorrow afternoon will be talking about setting up portfolios is to have a look at some gold stocks into any form of weakness at all. I think this can still get back a little bit. Not much, but it can get back a little bit. Copper, well, the copper market is pulled back on the back of recession worries, hard landing worries. I thought we were out of the woods when we broke up here, but clearly not. Clearly not. So, and oil, Oil, I think, is pulling back. It's filled the gap. There was a gap here. It's filled the gap. It still looks fine to me. Clearly, my ideas were completely wrong if it breaks down through that level. So holding Shell, and Shell's done quite well for me. Natural gas, well, no excitement there whatsoever. No excitement at all. And I put Serica in because I think Serica looks to me, if it can break above these tops on the daily chart, we'll have a look at that for a setup during the course of the presentation. If it can break above that level, and you can apply the near perfect indicator to that, I think that there's a big one ahead of us in Serica, although to tell you the truth, I haven't bought any yet. So that's what I've got, and I'm not saying I'm perfect by any matter. I'm resilient, and I play the game very, very well, but in terms of forecasting, I'm average enough at times. So making money in markets is all about resilience, folks, and mastering what I spoke about at length last week, being able how to think in probabilities, manage your money very, very well indeed, and getting your mind to a point where you firmly believe that in any one trade anything can happen, and when that in fact occurs and your prognosis doesn't work, it doesn't cause you any pain, and you move to the next one. If the result of one single trade is causing you pain, then it infers that your beliefs about markets are out of sync with the realities of the market environment. If one trade causes you pain, invariably this means that you thought you knew it was going to happen next. So I don't want to get back onto that hobby horse this week. But if you want to take the pain away, you have to buy into that. So I bought some Kitwave, starter position in Kitwave. I've got a large position, my largest positions in Games Workshop. I bought a starter position in QQ. That's based on a rocket launcher. We're going to look at that in a second. I've got a position in Bloomsbury, which I've held since April 2020. That's 3 years I'm in that position, and it's done well. AEP would seem to be moving. Greencoat, I'm not that happy with it, but it pays a huge dividend. 4imprint, I've got a position. Maybe I should have sold it when I got to 50, but I got tempted by that big RV, and there is a big dividend coming in a few days' time. I think the last date to register is on the 3rd or 4th of May. Jet2 looks like an advance. We'll look at that again. And I have a position in that, and I added to that position. I bought into Italia Mining, but my entry was early, and it's come back with the copper price, so that wasn't great. Plus, I'm holding Slovenia Platinum. I'm holding, so trying to walk the talk, folks. So, what did we talk about? We talked about, at least I talked about, the importance of doing your best to try and be in sync with the trend. And I actually define the trend by these three moving averages, 21, 55, and 89. And where they all cross, as I've told you many times, I refer to that point as a bow tie, because it looks like a bow tie. And as you can see, frequently markets will come back to that 89. Sometimes they'll stop at the 55, and sometimes they'll pull back to the 89. This is Games Workshop. Took a nice little dividend in there. I think it's going to be paid in June or something. And this is an example of, I'm hoping, what Andrew Duck is going to, in fact, address at our next FIC session, where Andrew specializes in looking for stocks that are going to pay a reasonable dividend and still recover very quickly from paying that dividend. And he talked about that, I think, last December at our group, and he's updated that presentation. So that's going to be well worth listening to on Wednesday the 17th. Okay, but that's a classic example of it, where I think there was I don't know what the dividend was there. It wasn't big, 1.5% or something, and it just shrugged that off. Now it's moving higher. This is clearly a very important level. This all-time high. I'm not sure if it's an all-time, not an all-time high, but this 1 year high anyway. And clearly 100 is one hell of a big number, so it's got to get through that. I'm hoping that it will. If your trades are in sync with these moving averages, they tend to go your way relatively quickly. Okay. Now, what I also talked about is my favorite setup, which is this concept that Richard Wyckoff talked about, a sweet spot. And I mentioned Costain in the essay the week before last. And you can see there is resistance, and that resistance became perfect support. Our moving averages are saying yes, there was a bow tie there somewhere, and moved beautifully up. There's Dr. Toledo's buy signal coming in, just there. You can certainly wait for Dr. D's buy signal. It makes a great signal with these setups, folks. And as you can see, as this ran up, volume increased. And I think it was Paul out in our Oxford group who said that my sketches tend to look like his last electrocardiogram. So I hope you can see that. But and then all of a sudden, we go into this now. Anthony, I think that's what you would call a volatility contraction pattern. To me, it's an old-fashioned triangle. And as you can see in here, you can see that the bars, or certainly the difference between the highs and the lows, get much, much smaller. And that's the volatility being compressed. But what's more important than that, or at least as important as that, is that the volume is actually quite low. And in the essay, in fact, I wrote, before it broke, that it should break. Now, it broke on reasonable volume, it pulled back, and that looks to me as if it wants to go again, ladies and gentlemen. So Costain and a lot of the big infrastructural groups doing very well, and that's on the basis of this huge amount of money that Biden is putting into the economy in the US for infrastructure. So at least that's what the talk is. So on this, we've got a really good example of sweet spots and volume. Now, Anthony, there's no doubt that when you got that breakout up there, the stochastic would have been overbought. And that's why it's just so important to have a setup. If you're trading the volatility contraction pattern, the stochastic, and you're looking for a breakout, the stochastic doesn't really come into it. I think your point is good, that if the market breaks out and you see the stochastic was oversold or maybe showing divergence prior to the breakout, that could add to the conviction that you have. And that is an exceptionally good example of sweet spots and volume. And if you did nothing else but that, you're going to be a very successful trader, and I think you're going to build up your ISA account very quickly indeed. And to find these, even down around here, all I did was to look at the top 30 or 40 by VST. Now, this is another stock where, and we're going to see where I found this stock, but this is EasyJet. And EasyJet, I haven't got a position in this. I've got a position in Jet2, as you know. But there's the moving averages, and there was the bow tie, somewhere about here. There's resistance, and this is really important, folks. It came right down here and was hit hard by an order bank here. And it's now sitting now. I don't know whether that's a volatility. It doesn't look like a volatility contraction pattern to me, but certainly it's going sideways in this rectangular formation. It's on a VectorVest hold at the moment. The stochastic here, Anthony, is coming up through 20, and that looks to me as if that can do something. Yeah, that's where I got it from, Jeff. That's where I got it from. Jeff is in front of me. Thank you, Jeff. Good to see you on Friday, sir. And good to see everybody that was at the show on Friday. I hope I had enough time to speak to everybody because these shows cost a hell of a lot of money, and VectorVest expect me to sign up an awful lot of clients on that trial offer. And if I don't, I get what's called a good old-fashioned bollocking. So this looks quite good. And Jeff, that's where I got it from. I got it from Jerry's Gems Unisearch, and it really the chart really speaks to me at the moment. So it really does. I think I've got Jet2, so I think that's enough in that sector. Now, this, I think I put the same chart in twice, folks. Oh, no, I haven't. In the previous one, we've got, this is resistance and that's support. So that's the sweet spot, but it's also a flag. All right, it's also a flag pattern. And I'm not going to spend that much time on flags because I wrote about them in a great deal of length this week in the essay. Okay, so if you want to have a look at my essay, just go to views. On the right-hand side, you'll see the essay viewer, and go in there and have a read at that. So that's a flag pattern. And the flag, Anthony, and the sweet spot frequently line up. But on many occasions, the sweet spot will occur, a pull back to the last old top, and there's no regular pattern. There's no flag that you can see. All right, so Thank you, Carol. That's so kind of you. That breakout, and again, you can wait for Dr. Toledo's signals. I think maybe I've said that already, but and here it went sideways. We didn't even get to a sell signal here. Okay. And this is Kitwave, and I couldn't resist Kitwave, folks, and that's why I added to the position. Again, you can see that this resistance has become support, and you get this flag. All right, draw that line, draw a parallel line, which is one of the weaknesses of VectorVest because there's not a parallel line on there, and I've been nagging at them for years to put that on. Please nag at them; they might take more notice of you than me. As you can see, as this is rising, volume is ticking up, and as this is pulling back, like so, volume is next to nothing. I think, folks, if you want something, let me get this right. If your character and your personality is such that you want to be right a lot, and you've got the ability to sit and wait, then nothing will make you right often more than price and volume. And all you're looking for is a trend, and you want to see aggressive, as the price rises, you want to see volume expanding. Okay? And then as the price pulls back, you want to see volume go to zero, as it did there. See? And as I said last week, folks, the market makers can lie about price. They can take it to wherever they want it, but they rarely will lie about volume because there's not that many people watching it. And again, the thing that I got excited about Kitwave was that last week, as it went up from that low, we had 2 or 3 days up, and you see the volume went through the roof, the highest volume apart from one day that we've had in a share ever. So, and then all of a sudden it goes sideways on virtually no volume. I don't know what's happened to it today, and I don't care. All I know is that if I were to trade that setup 30 times, I would probably be correct 20. Bull flag with a sweet spot will be a normal trend, Ben. That's correct. The flag normally pulls back to the last old high. I don't know what's happened to this. Anybody got a quote on this today? But I'd be very surprised if that doesn't move up very quickly indeed, and that's why I took the position in it. But I'm speaking probabilistically. So that's sweet spots, flags, that should be an S, and volume, all coming together at once. All right. Now, this is Cerillion. It's software business. And the one thing that we can see in this chart, we can see the obvious trend line. You see it? 1, 2, 3, 4. Pretty obvious trend line to me. You can see the gap just there. The gap in this case was slightly below the trend line. It can happen. The gap can happen in the middle of the trend line or either side of the trend line. And as you can see, I'd actually gapped on fairly good volume. And then all of a sudden, we had this market going sideways now. And I haven't got a position in this, but that's a rocket launcher, okay? And pretty good volume coming into it as well. Kitwave is down a bit today, 272. How much is that down? $268 I've got here, 272. Anyway, it's going sideways there somewhere, not the end of the world. Now, I didn't trade this thing called Billington. I know lots of our clients have done, but I found the volume just a bit light for me. But running up here, big volume, for it, big volume. And then all of a sudden, in this sideways pattern here, no volume at all. And I think the thing that there's an ascending triangle here, and it gaps out of that. That's the rocket launcher, and there's good volume here as well. So for those of you that traded that, that's great. The volume was a bit too light for me, so I didn't bother trading that. Now I have a position in this. This is called Quinn Etic. It's a defense stock, which I like the look of. The bow tie is just kicked in here, and it gapped out of that obvious trend line, and we shall see what happens. I've got a starter position in that I'm hoping to add to if it does go my way. And that, in fact, was noticed by one of our most experienced traders, a guy called Alan Lakin, at a Monday afternoon seminar. He told me, I thought he was talking about the QQQs, which is the American tracker of the NASDAQ, but this is an aerospace stock, and always worth, especially when you get a big consolidation like this and a gap out of that, then that's always a trade worth taking. So that's the rocket launcher, folks. And those setups are in fact, bread and butter setups for your ISA. Okay. So let's have a look at this week's material. And have I got the thing here? Yeah. Get it. And I need to go back. I was working on this earlier. And this is the stochastic. Now, the stochastic, those of you that are mathematicians will know that a stochastic is a series of numbers. The stochastic that George Lane uses has got nothing to do with the mathematical definition of a stochastic. George just thought it was a nice number, a nice name. That's why I called it the stochastic. And I'm not sure. I like the support and resistance coming in there, especially if you see the market reacting fast at that support and resistance level. It's a good sign that there's institutional people there. So we want strong fundamentals, and for me that means RS at least greater than 1.1, RV greater than 1.25, GRT greater than 20%, the stuff that we went through right at the start. I think that if I could discipline myself to only trade with the moving averages, I'd be much richer. Sometimes I think that's Larry Pisavittis' fault. I take far too many contrarian trades. Larry's a dear friend of mine. He's a Fibonacci expert, and there's nobody in the world more contrarian than Larry. The stochastic, less than 20, and the stochastic showing reverse divergence. And I'm going to define that for us now. But back in the day, this is a chart of Sylvania Platinum. And as you can see, it pulls back. I've just put on the 21 and the 55. And it pulls back, makes a little double bottom. And you can see there's a little top there as well. So it's a little bit of a sweet spot. But the stochastic gets right down on its knees. But as the price is making a rising bottom, the stochastic is making a falling bottom. And that's the divergence that causes this thing to move and move quite fast. Similarly, we had another one here. Price is making a rising bottom, stochastic is making a falling bottom, and that was a buy signal just there. In better days in Sylvania Platinum, they'll come again. And I think that I've got a schematic soon on this. Scottish Mortgage showing the same thing, but that's the schematic that I had, and I've told you with this before, but that was drawn for my very first technical analysis seminar in 1989 at the University of Stellenbosch in Cape Town, outside Cape Town. Price is rising, indicator is falling. When it comes up through 20, that's the buy signal. It causes the market to move. It's counterintuitive. Okay, and that's pretty much the same. This is a forex chart, euro pound to get on the 1 hour. And folks, the reason I put this in is that if it works in forex, it'll work anywhere. There's nothing more devious than the forex market, and there's nothing more cynical than a forex market maker. And if you don't believe me that the forex market is devious and difficult, then just have a go. Just have a go. It's a really difficult market. And I see on the show on Saturday or Friday, people showing people brand new people, how to actually trade the forex market. And I say we pray for them, you know. So it's really, really quite difficult. If you look at price and volume, some of the trend with great fundamentals, and you put together some of the setups that I've just spoken about in the stock market, where you ally great fundamentals, a trend in the stock, maybe a pullback to a simple pattern, like Anthony, your volatility contraction pattern. If you actually look for volume rising, when the price rises, volume pulling back within that pattern, and the general market is coming to the party, then you can get it right 70-75% of the time. In the Forex market, with bringing everything to the party, if you can get it right 50% of the time, you're doing really, 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 really well. Unless you're a long-term player, or stop losses 500 points wide. So I just put that in there. If it works in Forex, it works anywhere. And it's about one of the only things that works in the Forex market. This is a stock did really well the other day. This Craneware as well. This is a stock that's going places. I wish I'd kept mine, but this was a great setup, folks. And as you can see, Ben, where did I find my little arrow? As you can see, there is a sweet spot just there. Markets. Do you know what? There are traders and big traders at the institutional level, and that's the only thing they do. Okay. Got that the wrong way around. That's right. Where that resistance becomes support. It's the only damn thing they do. Okay. As you can see, because you're buying support, Anthony, the stochastic gives you a very good signal. If you had decided to buy the breakout, you can see that the stochastic was right up there. Now, certainly, if you look back and you see there was divergence there, and it came from that would give you a great deal of strength. So your comment that you made in the comment in the written comments before we started is pertinent. But that's just such a great little trade there. Now, the longer the divergence lasts, the better. And George Lane, when he showed me this stuff, reckoned that a divergence anything less than 14 bars is not worth looking at. So I'll make that 13, so it's a Fibonacci level now. So you'd want to see on a daily chart at least 13 days of a divergence, and the longer the better. That's why I get so excited about that Serica divergence. It's going on for years. So 13 days minimum on the divergence. This is square, and again, same stuff, folks. Resistance becomes support. Now, I think that the stochastic here does a really good job, because you could have bought it there, and somebody did okay. But market goes sideways, and as you can see, the stochastic only got back to 40 here, but now it's got back to below 20, and away it would go. And that would, as we'll see in a second, would come out of Jerry's gems quite easily. So. And I'm going to talk about targets next week. And if you've gone through the material, you'll know this, but targets are just so important. I get so many questions about it that I'm going to actually pretty much devote the whole session next week to looking at targets from all of these patterns. Now, the next pattern, and I have at least one trader up in Edinburgh who, in fact, just lives on this one Unisearch. Now, if the system has worked, this should be a part of your Unisearch at the moment, Jerry's Gems, in the ISA Millionaire folder. And if you haven't got it, then you need to give me a shout, and I'll get Big Jerry to put it on for you. But you should have it already. Now, as I say, I use a 21, 55, and 89. Jerry uses a looser measure of the trend. And it's as he says here, it's an intermediate or long-term measure of the trend. Less momentum in it, and he's put together a Unisearch which combines the trend and an oversold stochastic. So look for the 50-day and the 150-day to be trending higher. And as an eyeball, he wants to see the 50 moving away from the 150, i.e. the trend is actually getting stronger if that's the case. The tool will tell you to buy when the stock is above the 50-day moving average and the stochastic comes up through 20. And place an order at the previous day's high. Okay, that's the Unisearch. And it should be on your system. If it's not, then you need to email me and let me know. And I will have it fixed ASAP. The only fundamental input here is that the growth rate is greater than 15. Yeah, Jerry's Jewels. That's Jerry's Jewels, as he changed the name. Maybe it's called Jerry's Jewels, the latest version of it. Okay, so that's the Unisearch, and this is on Apple, and as you can see, that's the overbought, that's the oversold. I think you know all about that now. But there's the two moving averages, the 50 and the 150. And it's interesting it uses the 150 because 150 is 30 weeks. And if you remember Mark Cowan's talk at our SWIC 2 months ago, he talked about the power of the 30-week moving average to define trends. And that was used by Stan Weinstein in his book. This comes up through 20. Earnings per share is growing quite nicely. And we're above the 50-day moving average. And that gives that as a buy. Okay. And this is Johnson & Johnson. Again, the same thing. A buy just there. This healthcare stock, just there as well. Now, believe it or not, those guys across there don't look at reverse divergence, but there is reverse divergence there as well. And if you remember back to my stuff on the fundamentals, when you can see earnings per share being marked up like this, that's a sure thing, or at least as sure as you can get in this line of work, because if earnings per share rises like this in a ramp, that pretty much means that the share has done much, much better than anybody anticipated, because our earnings per share forecasts are based on the consensus that we buy from FactSet. So, and FactSet have done a consensus from all of the brokers and people who cover the stock. And when they see earnings per share just gapping up or ramping up, invariably that's the stock outperforming what they felt was going to be the results. And that's always a good, real kick in the pants for the stock. Similarly, if you see earnings per share falling fast, well, that's something to worry about. Share has done much, much worse than we anticipated. So that would be just a buy signal. And the search, you can run the search every day for both the UK and the US markets. You're going to have to, in fact, probably write it into the US market yourself, but that will be good experience using Unisearch for you. And that is another example of the same thing. And another example of the same thing. So many examples of the same thing. That's a particularly good one. There's a bit of divergence here as well. That's rising, that's flattish, and away it goes. So let's look for it. And lots of examples here for you to have a look at. This is in the UK. This was Evras way back in the day. That would have been a buy signal just there. Fever Tree back in the day, and that's the Unisearch. So let me go there now to the program, and I want to go to Unisearch. I was in this morning, Jeff, and that's where I found this morning, in fact, early on. So I'm told, Jeff tells me that Jerry's Jewels 2, it is. It's been changed, and I didn't. Used to be called Jerry's Gems, so they've changed the name to Jerry's Jewels 2. So that's the Unisearch, folks. Quite simple. Stock, it must be above 50 pence. That's the 50-day moving average of the volume. Price must be greater than 50. Price must be greater than the 150. Stochastic, 14.3, must come up above 20 in the last 1 day. And the 50 price must be greater than the 150 price. And the growth rate must be greater than 15%. So the only fundamental input is this 15%. And if we run that today, that's what we got. And we'll run it over the last few days and see if we can get anything. And if I put up EasyJet, and I had that chart up a second ago, but there's EasyJet. And as you can see, the longer term moving averages are up. I won't bother putting them on. I've got my own. And so the longer term moving averages are up, and my moving averages are up, and that's good. And as you can see, we've got a little bit of divergence here. I think that I would say that this is flat, and that is falling. That's good. That's really good. And we're now coming up. As you can see, it's come up by 1 day. Let's look at EPS. EPS is rising, and we've gone up from 10 pence to 22 pence. EasyJet's not an airline I fly with very often. The only time I would use it would be to Copenhagen with my dear friend Tom Hogarth. And Tom has just asked me to do a seminar with him in Las Vegas. this November. So it's going to be myself, Tom, and a gentleman that I spoke about, Larry Pesavitis, running a 2-day seminar in Las Vegas in November, which is something to look forward to. Hopefully, I'll be 100% by then. So earnings per share. Let's look at the fundamentals of the stock. RV is 1.45. RS is 0.85. Clearly, all of the airline stocks still struggling. Remember, RS looks at the books over the last 5 to 6 years, and during the pandemic they stopped, so lost money hand over fist. CI is not great. Remember, CI is a measure of the long-term trend. It's not great, and PE is expensive. So an earnings yield of 4.25, and it doesn't pay a dividend. I don't think there's much chance of it paying a dividend. If we look at the longer term trend, you can see rising, falling tops. So maybe we're being optimistic here. But they're all the AAG, for example, is exactly the same. But that looks like a good setup to me. Looks like a very good setup to me. This is particularly good here. This rose on rising volume. Let's look at that in detail. This rose on really good volume here. And that was quite good volume coming in. Good volume on those couple of days as it went up. And a little bit of volume coming in here today. That was the level. Somebody got lucky there. Somebody just simply said, there's resistance, there's support, put my order in. And I remember when I first discovered this material, out of Wyckoff's book, I used to put orders in advance of the market. And my stockbroker in Johannesburg, Darren Mervis, he was called, he used to say, David, there's no way that stock is going to go back to 4.30. It's trading at £5.25 now. And slowly but surely, the sort of thing would tick back and I would get filled right at the level. So sometimes you miss them. There's no doubt about that. It just goes without you. So let's have a look now and look at this day last week. So this is the 28th. Let's go back on the 21st. Frequently, London Exchange, LSE. Let's look at the fundamentals first. RV 1.16, RS 1.1, growth rate 23%, that's good. Pays a small dividend and got a good history of growing the dividend fairly safely. So this was last week, and there was the signal somewhere down around here on the 21st, and it's broken up a little bit. So all is good. There's the bow tie. That's really important. And clearly the 50 and the 200 are doing okay. Is there divergence here? Earnings per share is not great, is it? Over the year, it's up a bit, but it's not great. So volume is not in my face either. So let's have a look at this. Been in this range since COVID. The trend is there. It's not saying that much to me, but the trend is there. No volume as it broke up. And clearly that was quite negative there as it went down. So not talking to me much, that. In good markets, folks, you would get lots and lots and lots of opportunity here. Go back to the 21st, 14th. Adriatic Metals. I heard this being talked about the other day. RV is 1.54, RS is 0.95, CI is really good, growth rate is fantastic. So let's have a look. That was the signal that came in there, and I think this is still in play, folks. So let's look at this. Somebody got caught there. That's where the signal came in, and as you can see, we've got something like this in play, and we seem to have taken out that level. EPS growing strongly from nothing to 10 pence a share. This is starting to look very good. And in fact, it's a good example of a spring setup that I'm going to get to next. So if you'd bought it there, you'd still be sweating. The stop loss is down here. So that's Jerry's Gems, folks. That will find you lots and lots and lots of swing trades. Any questions on that? Any questions, folks? Pretty clear. The last setup, and then we're going to, then I'll let you go. And this is my favorite setup. It's something that I use all the time. And those of you that come to the Q&As, well, I've heard of the Wyckoff Spring probably too many times. Well, I'll try and cover those next week, Ben. I'm running a bit late now, but the spring itself is nothing more than a double bottom. And so we have this concept where this resistance becomes support. And in the sweet spot, it comes back once and then runs up to heaven. But in this one, it comes back down, takes out the previous low, even by a tick or two, and then starts to move up. So largely, it's this type of formation. And where that resistance becomes support. And it's a double test, in other words. So you've got this level going through here. You get this little bit of stop loss running below that low. And that's what Mr. Gann called lost motion. LM, lost motion. And it's not called a spring for nothing, because once it runs the stops, it invariably flies up the page. And that's why I think that previous Adriatic metals could easily be a spring setup. Now, it works, and this, for example, is the American stock market on a 30-minute chart. Now, the reason I put the 30-minute chart up is that if it works intraday on a 30-minute chart and something is as tough as the Dow Jones average, it will work anywhere. And there's the bow tie saying the trend is up, and it goes sideways, then comes right down and takes out the low, and then goes. Now, the reason that intraday trading is so tough is that to get a decent risk to reward, you've got to simply buy that level. Now, its mirror image is an upthrust, and that is an upthrust where it goes up. In other words, it comes down, takes out that level, goes back, and this support now becomes resistance, goes back down, and then flies up and takes that level out and then falls again. And that's what's happened just there. That's on Forex. Again, if it works in Forex, it'll work anywhere. And that's an upthrust, and that's the spring, just there. Comes down, takes out that low, and I think you should trade them with the trend. Gann used to trade them all over the show, but you have to, with the indeterminate of the trend, I think you should trade them with the trend. There's plenty of them. So that's on NEO. Didn't work that well. That's in Palantir. Setting up. That was in Shopify. That's just a really good example. This resistance becomes support, and then it goes right down, takes out those lows, and then reverses. That's in Pinterest, the way back in the day. 2 of them in a row. Halma is a classic on Halma. And then the hammer is confirmed by this big bullish candle. Now, folks, these are difficult to trade. Not because they're difficult intellectually to understand, but you're buying at the point of maximum pessimism. Whereas, Anthony, on the volatility contraction pattern, you're actually buying after the share has broken out. So the share is actually going the way you want it to go. So emotionally, that's much easier to do. These are tough patterns to trade. That was Bellway back in the day. BlackRock Gold Mining, not so long ago. Beautiful setup. So I now want to go and look at some examples in this market. And the first one that I'm going to look at is in fact just this Adriatic Metals that where we were. That's EasyJet. That's not set up. So let's go as ADT1. ADT1. So let's go to viewers now. Viewers. And Jet2. I'm going to take the fundamentals off because they're quite good. The stochastic is right down here. And I think that we'll get a Jerry's gems off this. I'm going to take moving averages off for a second. I'm going to take volume off so we can see the wood for the trees. Bring this up to 6 months. So I think that take the stop loss off. Jerry's moving averages will definitely, the 50 and the 200 are in the clear here because we're well above the 89. So I think we'll get a Jerry's gems out of this quite soon. It's got to come up through if it works, we'll get a signal. So if you run that Unisearch every day, you'll find it. Now, this market has come back. There is a level here. There's no doubt about that, but it's not a what I call a shoulder where resistance becomes support. But we've come down, and we've certainly made a double bottom here, and we seem to be finding support here. So I've already added to this position, and maybe not the best entry. Well, it wasn't the best, but a lousy entry. I entered on the triangle here, just added just there, and that didn't work, and I'm sweating underwater. But I'm well up in the position from this flag. That one was great. But I'm hoping that this level will hold. The stop loss is right underneath those lows, and I'm hoping the level is going to hold. So looks good to me. If that's the case, then this would be a classic spring. And I think there's if you look at earnings per share, rising very strongly here, very good season in front of us, hopefully. So I'm hoping that that's going to be a classic Wyckoff spring. We shall see. We shall see. So at the minute, that position that I entered at 13 is underwater. It's the way it is. And that other one that we looked at a second ago was AD1, ADR1, stock viewer. Adriatic Metals. This is a very good set of numbers, isn't it? As we saw a second ago, the trends were strongly up. We've now got a really good, what I call shoulder here, where this resistance is now support. And it seemed to have come back twice. And you can see that little bit here underneath those lows. So that looks to me like an exceptionally good setup. The Jerry's gems or jewels or whatever it's called these days give us a signal here. If you'd bought there, you're sweating. You do a lot of sweating in this line of work, folks. Let me see anything else of interest here. For an aggressive trade, that's starting to look very good. Starting to look very good indeed. ADT1, yeah. So that looks very good indeed. Ben says he wants to have a look at Tesla. The American market's open. It's off 16 points. Viewers, stock viewer. Tesla. My brother, who's a very forthright ex-detective superintendent in the Metropolitan Police, told somebody the other day that he felt that Teslas looked like Mazdas, which didn't particularly endear him to the Tesla driver. I better not tell that to Steve in Oxford. So it's numbers are good, as we all know. So here we've got this market, this run up and the 3 waves back. It's starting to look quite good to me, I'm afraid, but let's get the fib off. I'm going to, fib is a very, very important part of my target, so that's why I'm going to cover that next week. This For example, if we do get a close above that level, and it's got to do a bit of work to do that, then that would be a spring. There's no shoulder here, but there is a level here. So that would be good. It's got to do a bit of work to go to hold, then it's got to do a bit of work to go to buy here. And all the bullish Tesla people are hoping that this sell-off that we've had is over. And I think technically it's starting to look very good. We've had 1, 2, 3, 4, 5 waves up, and that's difficult to count on the way back. But yes, I think it looks good, and that should be. I've got a meeting with Steve Tesla, who's Tesla's greatest supporter, on Friday, in fact, and I'll be telling him and speak to everybody about it tomorrow, that Tesla's starting to look very good indeed. Okay. Yeah, Carol, my dear brother is not very diplomatic. He's a copper, so if he knew you for 20 years and you had a bold tire, he would nick you straight away. So folks, we've got setups that I've gone through in some detail now. I haven't done any trading psychology today. I shall do my best to try and finish that off next week. But I think that, first of all, you want to trade in stocks with great fundamentals. I think you want to trade with the trend until you've got your wings at this. I think that you want to see evidence that as price is rising, volume is rising, and as price is pulling back in a flag or a triangle or just a simple pullback, that volume is falling. Resistance becomes support most of the time. I think that the stochastic can be a very valuable tool to entering trades with the trend. And if you want to find those trades relatively easily, if you run the Jerry's Gems Unisearch every day, you'll get plenty of trades. Now, this trade in Tesla, of course, would be against the trend. You can see, and this is a contrarian trend. There's the 21. As you can see, if anything, the trends are down. Let me put the 89 on. Simple 40. '89s, in fact, these are just about to cross. The 21's crossed at 55. If market moves up from here, then they won't cross. But it's not a positive situation. And all of this period here, that was a beautiful upthrust. Market came down and then went up and took out that level. That was a textbook upthrust. With any luck, there's going to be a spring here. It would be a spring against the trend, which puts the probabilities of success a little bit lower, marks them down a little bit lower. Yeah, I think that you can go back quite a long time, Ben. September 2020. Markets have got memories. This one you're talking about. I don't think so. That's pushing it back a lot. Don't think so. No, that's going right back to here. There are some who would say yes to that, but I don't think so. Don't think so. I don't think it takes anything away from the setup. Markets come down, taking out that level, and certainly a close above here would be good, that's for sure, for the stock. So don't make it too difficult, folks. You need one setup. Stocks with great fundamentals that are in a trend, and hopefully you'll buy a pullback on falling volume when the general market is rising. Now, next week, I'll do my best on the 13th to put my mind to having a look at some watch lists other than the top 30 or 40 by BST, and namely the Midas Touch watch list and the DEW swingers, which you should have. And then we'll have a look at targets, how to actually work out targets. So I've kept you 50 minutes longer than I thought I would. And hopefully I'll see you tomorrow afternoon at about 1:30 for the normal Q&A session, okay? But you know where to find me if I can help you. I'm a bit underwater with emails, I'm afraid. I've got hundreds of them over the weekend that I haven't put my mind to yet. I'll do my best to try and get back to those this afternoon. All right. John wants, where do you find the PowerPoint for this material? John, if you go into the lessons, you can download the material. So go to VectorVest University, and you can download the material from there. So home into the VectorVest University, and then and find the course that you've enrolled for. Not sure where it is here, and then away you go. Are you talking, John, about my PowerPoint for today? I've just summarized what I've done today out of those notes. See if I can find it here. That's it, just there. You click on that, and just in here, I think. There, module 4. And then download the material. Resources, slides, and there they are. That's it. Okay. Yeah, slides are in resources, yeah. Thank you, Anthony. Just there. Okay, folks, if there's no questions, then I won't take up any more of your time. I'll see you all next Thursday, the 11th, and hopefully tomorrow afternoon as well. Okay. Thanks very much. Cheers, Julie. Bye, Jeff.